Hello again, this is Alex with MasterChartsTrading.com. This is market recap for Friday, October 25th, 2019. As always, please hit the like button, subscribe to this channel, and share this video with others. Your contributions and your likes is what keeps this channel going. So we are seeing new highs for major indices. S&P, QQQ, and Dow Jones all hit record highs. This is obviously good news. Technology and financials also hit record highs. We'll look at those. We'll see some trade examples. France, JP Morgan Chase, and we'll see what to do about Netflix. So junk bonds are confirming this move higher for stocks, and treasuries are pulling back. And overall, this is creating a very mm, good scenario for stocks, I think. And we'll look at oil. It could be going either way. We'll see which way the price action is heading, and we'll also examine energy ETF XLE. Copper could be rolling over, but we'll see if that's going to happen or not, obviously. And dollar at an important support resistance level, and we'll look at Canadian dollar and peso, Mexican peso. Well, Bitcoin just skyrocketed today after it held support. So let's start with S&P 500. So we're seeing record highs. Again, I'm reiterating that we should not be looking for anything of tapping patterns or anything of that nature. We should only be looking for pullbacks and to try to get in on a pullback to go long, to be buying. We should not be trying to short this market because um, technically, it can continue indefinitely. A trend is a trend until it is no longer a trend, and currently the trend is up. So QQQ also record highs. Uh, no divergence between S&P and QQQ. Dow Jones actually hit record highs a few days ago. So overall, obviously, a bullish picture. Some of the sectors also are hitting record highs. So here's XLK, technology sector. Overall, the composition is similar to Nasdaq 100 ETF QQQ, but I wanted to mention this one as well because it is definitely hitting records. So we should be again looking for pullbacks. So for example, here was one such opportunity for XLK, the technology sector, and it happened on 3rd and 4th of June of this year. And you can see a pullback towards the blue indicator line. I should mention that these four lines on the chart, the green, the blue, the red, and the yellow, are custom programmed, but you can have these same indicators, these are called indicators, you can have them on your chart. You can have them on your trading view chart. And you do not need any paid TradingView account. You just need a free TradingView account. So once you sign up at MasterCharts Trading, you can have the same lines on your chart. So for this case, XLK technology, you can see just a marvelous opportunity right there on the 4th of June with a move higher. And theoretically, I would be keeping this position open and just sit in the position, do nothing. So again, you can sign up at MasterCharts Trading for trading indicators, alerts, or both. XLF financials, these are not record highs yet, but these are 52-week highs. So this is again a bullish posture, good news. 3 alerts were sent here back in August, and another one, well, basically all 3 of them were sent in August, and I would probably be sitting still in the position and just enjoying the ride higher. Overall, very simple technique. I am looking for two different setups. One setup is when the security has already broken out above the blue line and now it's pulling back towards it. We buy here. Or we can look for an initial breakout, as in, for example, on this chart occurred here on 13th of March, where I'm hovering. This is an initial breakout because before the price was below the yellow and the red lines. So once we break out above the blue line, we can just start buying. So this is for stocks. For forex and continuous instruments, we'll get there in a second. Some trade examples. These are actual trades again from MasterChartsTrading.com. I'm sending alerts to my subscribers there. So we can see three alerts, one on August 1st, the other one on 4th of September, and the final one here on the 3rd of October. Now you can see that it didn't immediately go in our favor and it dropped a little bit, but you have to realize that we're buying up here by the blue line, we're setting our stop by the yellow line. So yellow line for stocks, specifically for stocks, means that it is no longer in an uptrend and we will need to just either completely avoid them or potentially, if you know what you're doing, short them. For stocks, we're looking to be buying above the blue line and putting our stop at the yellow line. Yes, it's a wide stop, but at the same time, we we're trying to avoid getting stopped out by this, just noise price action, and we're hoping to get to our target. Target is, a few average true ranges away from entry. So again, I wanted to point out what the average true range is. ATR, and you can apply it to your chart if you click on indicators, and you can find average true range where I'm hovering. And usually I set my targets about two average true ranges away from entry, and then I'll sell part of the part uh, or advance the stop. Let's continue to another trade example. I think I already pointed this one out, but it just keeps going. So here's JP Morgan Chase. And three alerts again, one in August, another one in late August, and another one in very late August. So three alerts in August here. Again, the stop would have been at the yellow line, and you can see a little bit of fluctuation, but overall we can see a push higher, pullback, and then another leg higher. So overall, right this instant, we are up about 15%, and I think it could easily continue higher. I don't see, any bearish patterns here. So this is exactly what we do, and this is the kind of thing you will get if you sign up. This is called alerts, and you will get similar type of alerts in the future. Now I'm getting quite a bit of questions about Netflix and what to do about them. So up to and including, July here, I thought that we're gonna go higher. In fact, I sent one alert right there. But you can see that the price has continuously pushed lower. And in my book for stocks, again, Netflix is a stock. If we see a close below the red line for stocks, then it's a caution for me. And then finally, right there on 24th of September, where I'm hovering, you can clearly see a close below the yellow line. So a yellow line for stocks means that's it. This is the end of it. In other words, if we had a long position, if we bought, then we would just cut our losses here. If you are adventurous and you like to short stocks, which I don't recommend during the general bull market such as we have right now, but if you're adventurous and you like to short stocks, then right there on the 18th of October would have been an opportunity for you. Why on the 18th of October? Because the price came up to the red line, made a high above the red line, and then closed below the red line. So when we're shorting, we're reversing our logic. Before we were buying above the blue line, now we're selling below the red line, following a pullback towards it. So right this instant, I would do personally, I would be doing nothing, but some people who are more adventurous like to short stocks, and this could be an opportunity for them. Junk bonds are moving higher. This is good news for stocks. Again, junk bonds and stocks correlate highly. Here's the this is a chart of junk bonds, JNK, and here's a chart of S&P 500, SPY. You can see that the shape of the graph is very similar. Here's JNK, here's S&P 500. And this just means that junk bonds or high yield securities are moving in lockstep together with um, the stock market. This is again a good thing. and it should be happening. And correlation-wise, this is a correct behavior. So we are buying junk bonds, we are trading them on the upside. And when do we buy them? We buy them on pullback or on an initial breakout. On this chart, you can see an initial breakout right there on the 30th of January where I'm hovering, but there was not a deep enough pullback for my taste to initiate any more long positions. I would like to see a pullback towards the blue line. It did not happen, so we just did nothing. But overall, this is what we do basically. We just wait for a pullback and then we buy. The more conservative treasuries, so you can see here a top on the 28th of August and then a pullback, another attempt to go higher which failed, and now a pullback further. So overall, pullback in TLT is a welcome sign for stocks, and also it's a welcome sign for the yield curve. So let me show you the yield curve. So the yield curve is basically, what is the yield right now for the various length of time. And the yield curve can be found on StockCharts.com. If you click on StockCharts.com, charts and tools, and then find the dynamic yield curve where I'm hovering right there. So dynamic yield curve currently is making improvements. You can see it is becoming much more normal looking. In other words, the shorter spectrum of the yield at 3 months, 2 years, 5 years, etc., is currently below the longer ones, like 30-year. But just a few weeks ago, you can see that the shorter end of the spectrum was actually uh, above, the yield was above some of the longer ones, like 10-year or even 20-year yield. So this is what really worried me until very recently, but right this instant, the pullback in bonds actually is normalizing the curve. So right now, the yield curve looks much more normal. Perhaps we have avoided the um, inversion of the yield curve event. So again, a good thing, and we will be basically trading TLT accordingly. I'm right this instant not really trading anything, not trading TLT, but we had a position open, several positions in TLT from December of last year and January of this year, and another opportunity right there on the 1st of March for over 24% gain. So really, really nice move higher, and I think for now it has exhausted itself, and we'll see where it goes from here. Right this instant, again, I'm not trading TLT. Right, let's continue to various commodities. This is a chart of oil. You can see a lot of downward facing arrows. I actually shorted it on many occasions, sent some alerts. Not a lot of profit, I can tell you, from shorting this particular security right this instant. And you can see now the price is actually approaching bullish levels. Now you can see those indicators, the blue and the red line, and you can see the blue line is very close to the price action right now. What does that mean? That means that if the price closes above the blue line, we will consider the security to be in a bull market and we will start buying it here. Right now it's at 57.92. So if we see a close above the blue line, currently at 57.92, then we will start buying. It could potentially go, higher, 70, 80, $90. It makes no difference. It's a trend. Once the trend changes, then we will be buying it. Now, an alternative scenario is also possible, and we can see a close below the red line again, like we had before, and I was shorting it. For example, the latest alert and the short was on 30th of September, and I made a little bit of money, but not a lot. So it is still possible. Currently, if price closes below 51.70, then it could easily go into the mid 40s. So wait, let's just wait and see where it goes. Um, Energy ETF XLE, it's been down in the dumps, and if you again are adventurous, you can short. For example, here was an opportunity on 17th of September. Right this instant, it's at that level where I would be shorting it, but again, XLE is energy stocks. So I really don't like to short stocks during the general bull market, such as what we have right now. So I am not going to obviously short it here. What I will do is I will be on the lookout if we see a close above the blue, currently at around 64 bucks. So if we see a close above it here, then we will start buying it. Hasn't happened yet. But the way this price action is unfolding, I like that the indicators have kind of got closer together, and you can see before they were really wide and far apart, but now they're much closer. So that means the price has less distance to travel towards the bullish levels. Coupled with the fact that oil is approaching breakout levels, I think energy ETF XLE has a very good chance of breaking out as well. So we will be on the lookout for that and send alerts as needed. Okay, let's continue to some of the um, commodities action. So here's, for example, copper futures. So before we had actually these are downward facing arrows. These are actual alerts. One happened on 1st of July. Another one right there on the 23rd of July. And then another one right there on just recently on 16th of September. Clearly they were successful because you can see price followed through significantly to the downside. This was short alerts to sell short. Right this instant you can see the price is at the indicator line level, so it is support resistance level, and I am still a little bit reluctant to sell it, to short it here, because the price is not very bearish here. Here it was unequivocally bearish here in September, and back in 20, July here it was unequivocally bearish. But right this instant I wouldn't say it's that bearish. So let's wait and see which way it's gonna go from here. All right, let's look at dollar index DXY. Last week I pointed out this breakdown below the blue line. It's not yet in a bear market. It just broke the support. So right this instant I would call it oversold, but still bullish. Uh, let's see if it stops here and rolls over, especially if it closes below 96.77, then I think it's game over and pretty much the entire uh, dollar index would continue lower. However, individual currencies are already breaking out, and here's, for example, USD Canadian dollar. So you can see a close below the red line right there on 11th of October, and then a nice follow through. So if you are able to get in, uh, this is 185 pips move in your favor. So again, if you have opened, congratulations here. Same actually goes for USD MXN. This is a very nice move about, well, this is a different, the pips are different here, but it's still a very nice move, over almost 2% move, and it could continue lower actually. So in other words, Mexican peso is gaining and is Canadian dollar is also gaining. Of course, just incredible size of candlesticks. You can see in 2 days, price traveled 41% for Bitcoin. So that's cryptos right there. Cryptos for you. They do move that much. So interesting action. Um, Notice here on the 23rd of October and 24th of October of this year, the price actually did not close below my trigger, which is the red line, which was at 74.85. It stopped exactly at it. And then yesterday and today rallied really hard. Um, I'm okay with this. I'm not married to bullish or bearish side. I thought we're gonna go continue lower. Clearly, that did not happen. But I had no positions neither, and not did I send any alerts to my subscribers. So right now, if it closes above the blue, which is at 10,038 right now, then I have no problems to start buying it. Um, the opposite would have been also true if it closed below the red line. I would have no problem selling it, shorting it. Here's Litecoin, and in fact, this is an actual alert right there on the 23rd of September. Good for 35% gain because we would have been shorting it. I thought we were going to continue lower. I mean, Litecoin is still at the, what I call aggressive short levels at the yellow line right now. So, you know, yeah, Bitcoin looks incredibly strong right now, and maybe it will even break out into the bull market, but Litecoin has ways to go still. And the Ethereum is a little stronger because it's already above the yellow line. So it could get to the red line and just roll over here. It's also entirely possible. Okay, so that's it for today's recap. Please head over to MasterChartsTrading.com. That's MasterChartsTrading.com, one word, and then click on sign up. We have several services, and we're actually going to be adding most likely another fourth one, or maybe even a fifth one. It will just depend on several people collaborating with me, and we are actually in the middle of such a collaboration, and hopefully we will see new services here. But for now, we have three services. I have three services. I have alerts, and alerts are things like, for example, today I showed JPM, JP Morgan Chase. So there's an alert right there, good for over 15% gain. Those arrows are actual alerts. Um, so those are the alerts, and you get lots of different alerts. I guarantee you will not be bored. Now, if you're okay with trading on your own and you ready to do it, then you can simply sign up. Once you sign up for trading indicators, I will open the door for you, and you will be able to see the same ones on your TradingView account chart. You do not need a paid TradingView account to see my lines on your chart. Of course, the best deal and the best way to trade, I think, is to get alerts and indicators, because you not only get the actual trading indicators for yourself, but you also get my alerts. In other words, you get my analysis. I send analysis on daily basis, and I send several videos and analysis, deeper analysis on the weekends as well. Alerts cost $24.95 per month. The indicators $29.95, and together they cost $49.95. So I think it's pretty obvious you want to get both because it's the best deal. And of course, if you want to get for the year, it's just by far the best deal right now. And again, it may not last. All right, that's it for today's recap. If you have any questions, please send them in. Thank you for watching. And don't forget to like this video and share it with others. Bye bye.